Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back, guys. This is going to be my Elliot Wave count for pound, yen, pound, dollar, and gold. But first of all, any views, opinions, or suggestions that I expressed in this video do not constitute your trading or financial advice. So let's get started here on pound yen. So obviously I've been saying for pound yen that we eventually get this sort of movement coming towards the upside, and this is an extended wave three. In my opinion, where we are moving in this market, I would suggest is continuing to go to the upside. However, we will eventually have sort of smaller corrections to eventually come in to bring us back up again, smaller ones again, like that. So essentially, where we are currently is we have a nice wave one, wave two. Then we have a 1-2, then a 1-2. We're getting that three wave. We're expecting a fourth wave and then a fifth wave. That'll complete wave three. Then we're expecting a deeper correction into a wave four, and then that'll give us another wave five to the upside, and that'll complete the wave three of this 1-2-3 wave correction, if that makes sense. Then we're going to get a deeper wave four, possibly hitting the channel, and we'll then look to see for that last bit to the upside, that one more push to the upside, giving us that fifth and final leg, and that'll complete the fifth wave, and then we should expect a huge fall to the downside. Now that's obviously the long-term forecast of things. That's the way I see it. I would also say that we could possibly just get the wave four coming in here. I mean, this way bigger wave four, and this could be the 1, 2, and the 3, and then we'll get one more up, and then we just start crashing. But all in all, I like taking it one wave at a time, and I'm just counting the sort of subsections of this wave. I'm gonna assume that we might just continue going up a little bit higher, maybe even hit 200 yen per British pound or something like that. So, it's all hypothetical. It's just my analysis, but I would say for the meantime, we are gonna start to see some sort of correction coming back in, whether it's short. If it is short, then it's a smaller fourth wave. If it is quite deep and it touches the channel and it sort of bounces back up and creates another high, then I'm assuming that this is a wave one, wave two, this is the wave three, the wave four, the wave five, and then we should expect the market to eventually push to the downside, and this will be a huge move to the downside. So let's go on to the next one, which is gold. So gold has been moving a bit sort of weird. I would assume that we are currently in this wave four, and we've sort of extended this wave four out a bit more. So obviously the sort of smaller count on the sort of the lower time frames, you can go weekly, daily, whatever it is. This is a weekly time frame, and I'm assuming that we have a nice simple A, B, and a C. And this ABC here is simply a regular flat. So we have a regular flat here, an A, B, and a C, and that'll give us our wave W. And then what we have here is a nice A, B, and a C, and that gives us our wave X, and it did not take the start of wave W here. It came very close to the start, but it didn't take out the start. So we essentially have a 3, and we're expecting a 5 wave move back down as an impulse or a diagonal. If this gives us a 3, 3, and then a 5, then this WXY corrective structure is essentially a regular flat. And it wouldn't be a WXY, sorry, I don't know why I have that. It will be considered as an A, B, and a C, my bad. So yeah, a wave A, B, C gives us a wave A in the higher degree, and then a wave B right here, and then we're getting a 5 wave, 1, 2, 3, 4, 5 wave down as a C wave, and that will continue going down. Now we could possibly hit about $1,600 ounce in terms of the long-term foresee of things. Now in terms of like the smaller time frame, Let's go into the small time. Let's go like the 4 hour time frame or something. And currently where we are, essentially what we have here is already a wave one, a wave two, a wave three, a wave four right here, and then a wave five. Okay, so wave four is moved as a running flat right here. Here we go. We're wave one, wave two, wave three, wave four, and then this is our wave five. And what we're currently expecting this to be is a impulsive move as a wave one, and we're going up for a wave two, three, four, five. Now this could be a wave one, or this could also be considered as a wave A, and this could be considered as a wave two, or it could also be considered as a wave B. So essentially, where we are moving is we're moving in a three-wave corrective movement to the upside now. I would assume that we're going to eventually take the wave four highs. And what we're essentially going to get is a corrective move to the upside to eventually bring this market back down again. Now, if the market does eventually push to the upside, then obviously it's a different sort of pattern that we are in. And I will assume that this is possibly, instead of this being a 1, 2, 3, 4, 5, this can already be considered as a an A, B, and a C in some way, wherever it is. Um, with that being said, if that is an ABC, then this could essentially be still an impulsive move to upside. That's basically completing this fifth wave higher degree, if that makes sense, of this fourth wave regular flat pattern. Um, but all in all, I'm saying that we are creating lower lows and lower highs to the downside. We have moved impulsively, and also not just that, market structure levels have been broken. And I do assume that we are eventually gonna come take out these lows, and we could eventually continue going to downs. Now, at the same time, this could be considered as a wave one or wave two, then a one, two, three, four, and then a five, and that's the wave three. Then we're getting a one more push, wave four, then a wave five back down, and then we'll start getting that deeper correction, wave two or wave B later on, maybe something like once it takes out this low, and that will essentially give us a nice, you can see a head and shoulders pattern right here to eventually bring this market back down. And if this head and shoulders pattern is correct, then we could eventually see this to be a wave one here. Then the right shoulder will be in the wave two, or in a three wave correction, and then we start shooting down. So that's gold. I would say in terms of the long term foresee of things, we are bearish. Short term, we could be going towards the upside. Here's pound dollar. So pound dollar obviously has just been consolidating, but it's moving towards the upside. I've decided to say that we are completed our wave one or wave two has also been completed. We have a wave three here, a wave four, and we are in this wave five, but this wave five is ending as an ending diagonal. So we have wave one, wave two, wave three, wave four. We're getting one more push up as a wave five, and then we might start to see the market drop. So short term to the upside, long term I'm going to see a bit more bearish momentum eventually coming in, because we have been going extremely high since the sort of UK started, towards the end of 2022, which is basically what do you call it, recovery from like COVID and stuff like that. And not just that, we have interest rates going up extremely high, high inflation as well. And I'll just say, just be a bit more careful with this pair. We are in that sort of final leg, and you don't want to be pushing it. You don't want to be risking everything. I would suggest just wait and be a bit more patient, and you know, look for. If you want to look for the buys, then obviously look for the buys, but just be very, very careful. I wouldn't, suggest you guys to risk as much, as we are reaching the end of this fifth wave, and we could eventually see a sort of correction eventually come back to the downside. So I hope you guys do like my analysis. Please do like, comment, share, and subscribe. I do have a Patreon for all those people that are interested in mentorship. You guys will have access to my private Discord. And yeah, I'll see you guys on the next one. Wassalamu alaikum wa rahmatullahi wa barakatuh.